How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to tonight's session entitled Best Trading Setups. And of course, these would be my best trading setups. And let's just get right underway. Hi, Agabadian, Muhammad. Good to see you all. Good to see everybody today in the room. Let me turn on the lights here. Just had a little. All right, get everybody lit up. I think we're ready to go. I want to move this a little bit. There we go. All right, then, we are underway. So let me introduce myself. First of all, I asked Agabadian and Muhammad already responded, so I assume everybody can hear my voice and see the opening slide. And just please respond if you can. It's always helpful. And the only protocol I have in the room is that I ask you to please ask your questions in real time. It makes it more of a dialogue as opposed to a coma-inducing monologue. So video and audio, okay, says Agabadian. Great. All right. My name is Seth Julian, as I mentioned. I'm 65 years old. I've been trading in the capital markets for 52 years now. I started as a young man trading Xerox in my father's stock market account. I have degrees in political economy, international trade and economics, and management and finance. I started my career in the early 80s with an outfit called Bankers Trust Company, which at the time was a very progressive, and actually since its founding in the early 20th century, 1904, I believe, very progressive and advanced institution, which of course later got sold to Deutsche Bank, and like most things that Deutsche Bank touches, it turns into junk. And so it no longer exists. But I've worked for two trading houses since then, and I'm currently the Chief Global Strategist here at Alvexo. Again, if you have any questions, ask them in real time. We're going to get underway. My preference is for simple, obvious trades with as minor risk as possible. I have a risk appetite, but I don't like it. What that means is I can tolerate it if there's a profit involved, but I like to minimize it. I'm not a risk seeker. I have an appetite for it. I can take it when there's benefit involved, but I like to minimize it. Now, often, particularly as beginning traders, we have this mistaken opinion that a trade is complex, sophisticated, and therefore hard to find, recognize, and surely difficult to exploit. This is nonsense, mostly foisted on us by people trying to sell us fancy tools so that you can penetrate the mists and the fog of the capital markets. I'm here to tell you, ladies and gentlemen, that I can teach you all you need to know about trading with one simple rule: buy low and sell high, and its twin, sell high and buy low. That's all you need to know. A child can learn the rules. They're not complicated. Well, it took me losing my trading account value 3 times in my life, twice with sizable sums of money. It takes every professional trader years to master is the emotional control that happens when you're making a profit and you become greedy, or when you're in a loss and you become fearful and frightened. And don't think that only happens to the feeble and the simple-minded. That's also nonsense. It happens to me and everybody else. No matter how much education you have or experience, we're all wired the same way. We're all human beings. And we all react the same way emotionally to the stimulations of capital markets. So it's not that looking for the setup that's complicated. That's easy. It's the emotional control that's really hard. That takes time and practice to master. And we have sessions that deal with that. But in terms of the trade setup, no, it's not that complicated. The first step is to identify an asset that is trending. That trend can be well underway or in an early stage of formation. Once the movement is recognized, we then attempt to understand the reasons for the movement, i.e. the fundamentals. Should they be comprehensible and have a reasonable certainty of continuing, we trade along with them. Now, ladies and gentlemen, if this sounds simple to you, it's because it is simple. This is not to say that there is no risk involved, because as with all activities in capital markets, risk is ever present. So don't confuse simplicity with risklessness. No, no, no. It's simple and risky. So part of trading mastery involves managing your risk. And we have sessions that deal with that as well. Again, that's not today's subject, but my message to you is this. And before I go any further, I want you to understand this. Trading itself, well, that is to say, finding trades that are potentially exploitable is easy. You don't need, if you look at my graphs, the clients in the room who are regular, I'll show you here. This is the kind of stuff I use all the time. There's nothing too complicated about this. It may look cool, the colors may look interesting, but all it is a price chart, volume. The only indicators I use are the force index. On commodities, I use the commitment of traders reports, which is not necessarily at all. And this is volume on price versus volume on time. That's it. Okay, and of course the moving averages. That's the whole kit and caboodle of my indicator toolbox. Yeah, once in a while I'll pull a Fibonacci down to see how much the retracement is. But, well, let's get right into it. Trend following, it's my best trade setup, okay? I'm a trend follower. I'm not a technical wizard that looks at the resistance and calculates angles like he's trying to calculate a pool table shot. You see some of these graphs, and if you think you can make money trading on those lines, in my humble opinion, I think you're wrong. You've got to find a trend that's going to likely continue. And looking for the flags and the angles and the thing, and when it breaks out, and then you'll know to buy here, and then you'll know to sell here. I am not that good, ladies and gentlemen. I cannot make money that way. And frankly, I find it extremely boring. It doesn't interest me. If, on the other hand, I see a trend and I know why it's trending, I can get my head around that. That's something I can understand and feel the emotional commitment to. So there's an old aphorism that states the trend is your friend. I'm sure you've heard of that. If you haven't, learn it. The trend is your friend. And here's the definition: the general course or prevailing tendency, drift. Markets trend, okay? And the reasons markets trend is because the prevailing psychology in a capital market is a herd mentality. What that means is, I don't mean to say it's a mob or a violent mob, but it herds, it follows it. If you look at those, if you watch nature shows, or even if you've been lucky enough in nature to see yourself, giant flocks of birds moving, animals on the hoof, schools of fish schooling, you see that very few of them can actually see what's ahead, or the predations, or the topographic risks, or what have you. The rest of them have to follow. And they follow signals given by the preceding characters in the herd, whether it's a movement this way, up and down, a tail shift, a hoof. I don't know what they do, but they follow each other almost in a sort of mathematically choreographed. It's very beautiful to see. You see these fish moving. It's almost magical. Certainly with giant herds. This is the same thing that's going on in these markets. We follow along, we see what the market's doing, and we try to follow along. And that following along creates the tendency for further following along, i.e. the general course of prevailing tendency. Now, again, ladies and gentlemen, I realize this perhaps sounds simplistic, but it's the truth. Beware of people telling you that you need indicators that you can't afford because it's telling you things that you can't see, and this is utter nonsense. All these graphs and high-tech looking tools and features are measuring human emotionality. That's all we deal with in this world. I'm a human and I'm emotional. When I get into a trade and I'm making money, I have to control myself, because otherwise, just like you, just like everybody else, just like all the other traders in the market, we get excited and we have a tendency to become illogical. And that's called greed. Greed can be a very blinding emotion, and we have to learn to overcome our natural tendencies and control them. Certainly the case is true with fear. We get into a position, all of a sudden it doesn't seem to ever turn profitable, and thinking, well, I'm smart, I know what's going to happen. The market's going to bear me out because of my angles and my signs and my flags and my pennants. And you get frightened and you can't say goodbye. I'm out. That's my loss. So greed, in the sense that it keeps you from saying, I've made the profit I seek. This is a reasonable profit. I'm done now. Yeah, I leave money on the table all the time, but I get out with a profit. Or in the case where I've failed, I say, that's all the money I plan to lose. I'm out. I don't want to lose any more money. So these are the hallmarks of the profitable trader. She doesn't overstay her welcome in a profit, and she gets the hell out in the case of a loss. That's the long and the short of it. And so when you see these graphs and charts, these are showing you the emotional commitment of people, in this case, to the NASDAQ. Or the dollar, what is that? The dollar Israeli shekel, whatever it is. Is that clear, everyone? Okay, don't be misled into thinking that there's secrets and there's hidden formulas, and anybody selling you that stuff is is full of shit, and B, it was never a successful trader, because successful traders don't sell they have no secrets. Okay, they trade just like you and me, and this is all they have: the price, the volume. That's it. Every single day market puts out at least 4 data points for every interval of time. The opening price at the beginning of the interval, the high price reached during the interval, the low price reached during the interval, and the closing price at the end of the interval. That's signified by these candlesticks. Many markets, although not all, will put out the volume that occurred during the interval, how much trading actually took place. These are the 5 variables that come into play, and that every single technical indicator known to mankind uses some combination of those 4 or 5 variables, period. Ain't nothing else. So all I do here is I switch volume from being on time to volume being on price. So for this data set, this volume, this histogram shows you where the most volume most of the volume in this data set, going back to February of 2021, takes place at this price. So we see we're below that. We look at the exponential moving averages. Well, I'm sorry, I'm getting carried away. Let me go ahead with the program, and then we'll go into it. I get carried away with this. It's one of the truest of the Wall Street aphorisms. I want to emphasize early on that in this presentation that the trend can be up or down. The direction of the slope is irrelevant to the statement. As long as there is directionality. Oh, now I understand why this chart was included. There is no directionality here. The 20, 50, and 200-day, hour, or day, whatever moving averages are virtually the same. The price is barely moving. Oh, I see there's a little action here, that very last minute, but it's just very hard to make money trading this asset. This asset, on the other hand, well, it's moving. That's where the trend is your friend translates into practical opportunity. As opposed to price moving in a limited or bounded range, this is called ranging. Trading can exploit this directionality. Directionality is a fancy word for trend. Okay, now the above graph shows the kind of chart pattern I look for, namely a trend that is clearly identifiable, is surging, meaning that it is above the moving averages. The pink is the 20, the blue is the 50, pardon me, and the brown is the 200. One of the beauties of technical trading is that all of the indicators hold true regardless of the time interval. And I'll show you the technique I use to determine a good entry point, or determine whether the trade is even statistically feasible in a moment. It's called the triple screen method, where I simply say, I look at the same chart in different, what I call resolutions. If I'm thinking of trading it for a few hours, I'll look at the 4-hour, the 1 hour, and then the daily. If I'm thinking of holding it long term because it's a massive trend, I'll look at the daily, the 4 daily, and then say the 4-hour. So I can zoom in and zoom out, and if the trend holds in those different time perspectives or resolutions, I know that it's likely to be true, at least at the moment I'm looking at it anyway. So namely, a trend that is clearly identifiable is surging, and is above the moving averages and is attracted above average volume. The volume is an important indicator for me because it's a sign of sentiment, strength. Prices moving up on low volume have no value whatsoever to me. Prices moving up or down again on higher volume show me that there's a lot of trading sentiment behind it, a lot of traders doing or involved in that directionality, and therefore it's likely to continue. It's important to remember that this potential opportunity is based not only on the technical chart setup, but also the underlying fundamentals involved, in this case, Bank of Japan policy, as elucidated by Chair Kuroda. Specifically, he's looking to keep the yen weak in an effort to foster further Japanese exports and keep the economy floating, and he's willing to debase his currency for that. The Japanese yen, when this chart is made in June, is already 136. By the way, it's hit a 145 handle. I'll show you that in a minute. So this trend has been great and continuing. So knowing that the Japanese yen is not likely to, like another one of my favorite trades, the Turkish lira trade, which I'll go into in a moment. Also, it's a beautiful thing. So his continued monetary support through injecting enormous amounts of money into the economy by buying bonds from the public is going to stay in trend for a while. There are a couple of additional signals in our setup of choice that we look for. The first revolve around the 3 EMAs, or exponential moving averages. Now, whether they're exponential EMAs or simple SMAs is largely irrelevant. In fact, I have charted the, just for the purpose of this demonstration, I don't look at them, but I just wanted to show you the EMAs are the bolder lines. Their corresponding SMAs, oh, you can see it here, moving average EMA. They don't differ at all, really. The only difference is between an exponential moving average and a simple moving average is the exponential moving average has literally an exponent. In other words, it weights with a slight exponent the newer data in the data set, on the assumption, generally true, that but not generally true, though, in my mind, it's certainly a valuable assumption, I don't know, true, that the later data has more of a value, more of an impact than earlier data, particularly in large data sets. But you can see from the faint lines, the pink line traces the faint pink line traces the bold pink line. They're not significantly different. The average price is called value. Knowing a price is highly transitory data. In other words, just knowing the price at which an asset changed hands tells not whether the buyer purchased at a bargain or the seller got a high price. Neither can be known from the price. Only by knowing the average price over time can a sense of the value of an asset be assessed. In fact, there's a great quote in one of Oscar Wilde's plays, Lady Windermere's Fan, where Lord, I forget his name, maybe someone will recall it for me, Lord something or other, says to one of the characters in the play, he defines a cynic. And a cynic to him is somebody who knows the price of everything, but the value of nothing. And in order to know the value, you must know price over time, i.e. the average. Now, furthermore, by using 3 moving averages, you get a deeper view of the change in short, the 20, which is always the pink on my charts, the 50, the deeper blue, and the 200 value over time. This is truly informative insight as price moves through time. Price through time averaged out with these lines is called value. So what we say is price is now in this chart, again, this is an older chart, doesn't matter, I'll show you in the real time. Price is above its 250 and 20 day, oh, I'm sorry, 4-day moving average. That tells you that the market has more value, is valuing this asset much more highly than it has in the short, medium, long term. Is that clear? Okay. The second series of considerations revolve around volume. Volume is to the movement of price what momentum is to the movement of physical objects. The more momentum, and that's the product of a body's mass and its velocity, the more likely it is to continue its path of travel. In technical charting analysis, the volume associated with a movement in a price is what determines its momentum, or properly referred to as the sentiment behind the movement. The parallel is obvious. If more traders are transacting as the price is moving, it is said that the price has strong sentiment behind it. Look, like the momentum of things in the physics world, right? Look at this giant spike of volume transpires to, I guess, looks like right here and there. It shows you that there's a lot of battling going on there. There's a lot of people involved in that, way above average, and it takes a steeper slope upward after that point. So volume coupled with price movement is a powerful combination of indicators. And the only other technical indicator you'll see on my chart is the Elder's Force Index, engineered and designed by Dr. Alexander Elder, whose books I highly recommend to you, particularly for beginners, although also for advanced traders. He's one of the best in the business. He's been around for a long time. He's widely read and widely translated, and I highly recommend his work. All the force index does, and I don't mean to minimize it, but I do mean to keep it simple, because trading should and always will be simple. Don't be lured into these Nobel Prize winning geographical, geological charts. They're nonsense. All this is, it takes the difference in movement between the high and the low, the open and the close in an interval, multiplies it by the volume, and gives you this histogram. So in this case, price doesn't seem to move that much, but the volume is tremendous, thereby affecting the force index. And this sort of fluorescent line is an average of the histogram data points and shows me above the zero line. It's an oscillator, the force index. So it oscillates above and below a line, in this case, the zero line. And it tells me that when it's above the zero line, the trend is positive. By the way, let me also point out something else, for those, particularly for the beginners. As I mentioned earlier, but I want to point out here, all of these fancy pants technical indicators are based on this data, the price and the volume, period. All they do is help you focus in on a pattern that you should be able to, and I dare say are actually very easily able to identify with the naked eye. Human beings are nothing if not identifiers of patterns. It's said that infants from the age of 1 year old and older are able to look at a face and determine whether it's friendly or dangerous by simply looking at a certain pattern in the face and determining whether it's friend or foe. Now think about that. An average intelligent child of 1 year old. Now, if we can do something sophisticated like that, because we've evolved as hunters to discern power, taking shelter under a tree, under a rock, we see a shadow, a pattern, we can determine whether the creature is coming toward us, away from us, is big or small, alone or accompanied, and those things have kept us alive. And those mental facilities are with us yet today. And so given that extraordinarily rich ability, identifying patterns in a price chart is utterly elementary for us. If a baby can determine whether a face is friendly or dangerous, ladies and gentlemen, we can determine if a price is moving up or down, likely to continue moving up or down, falling, failing, or likely to reverse. And if you can't, well, you take a set of indicators that simply does that for you by combining the obvious visible data. I hope I've made myself clear on that point. Okay, that's it for the formal part of our presentation. Let me switch screens now and take a look at some real price action. All right. And now we're just going to go to the charts. And again, ladies and gentlemen, is your webinar recorded? Yes, it is being recorded, Jose. And how do you have access to it? You'll be sent a link to the recording, Jose, I don't know, an hour or so after it's completed. It has to be processed into a certain format or whatever it is. About an hour or so, you'll get at the end, about an hour after the end of the recording, you'll get a link to it. So yeah, no, you can go over it and study as much as you want. Now then, crude is one of my favorite. This is a weekly chart. Oh, by the way, let me tell you, these are the charts we get on MT4. These are fine charts. They're fairly well endowed with features like charts. And here I use it's got the force index, it's got the volume. I can impose a moving average on the volume. Here are my 3 moving averages. It's virtually the same as the other chart I showed you. And there's all different ways to set it up. There's green, and there's a million variations, anything you want. They're very visually appealing. But I like, for charting, the trading view. This is and I have a paid subscription with them. They don't pay me to say this. I'm telling you because I believe it. My pleasure, Jose. This is the best trading charting the program available on the internet. My opinion. It's free. The chart you're looking at now, I pay a small amount of money for every month to get certain features like this indicator. That's not on the free one. Also, the free one limits you to how much, like all these programs they give you. The free one is, it's all the same program, but it limits you. So the more you pay, the less restrictions it has. But even the free one is damn good enough, let me tell you. It's very flexible. It's very visually appealing. You can really make it suited to yourself very well. And you can put, anyway, I'm not here to sell TradingView. I'm just here to recommend it to you. Now, if we go to trading, let's drill down to a daily chart on crude. All right. Crude, as you know, has fallen. Recently, last Wednesday, pretty recent, OPEC Plus decided to cut back its production, and not by 100,000 barrels, by 2 million barrels. All right, that's a big cut. Now, it's going to take time. It doesn't happen immediately, but we anticipate these prices going up. So you see, it's broken above the 20. It's kissing the 50, and it's not that far. And oh, I'm sorry, I was on. It's broken the 20. It's broken the 50, and it's just broken the 200-day moving average. Volume is fairly steady, but the force index, well, that's pretty much above 0, and that's a positive sign. So those are all good signs. The large hedgers, which are the red line, this is the commitment of traders report, and I do a separate session on that. I don't want to go into it. The commitment of traders report, because this is a commodity, this indicator is available, is in positive territory. But they're not. I won't go into it. This is not an important indicator, ladies and gentlemen. It's only available for commodities, and it's only valuable in somewhat rare circumstances. So forget the commitment of traders report. This is the valuable indicator, and this is volume. As this price was going up in this spike, you can see. And this, by the way, why this spike? The date is your giveaway. Here's your giveaway. When does it start spiking up? February 22nd, February 23rd, the outbreak of the NATO-Russo war. So tremendous volume, boom. It calms down a bit, but continues elevating on falling volume. As this decline goes, volume stays the same. So this tells me this sentiment is pretty strong. Here at the reversal, volume is still the same, slightly ticking up, certainly no less. So whatever volume drove this is similarly driving this. Now, is it too early to get into the trade? Is this the time to get in? I personally am long oil. It's my opinion. I could be wrong. And remember, and I'll say this a million times, there's risk here. You should only be trading with money you can afford to lose. If you don't have the simply the stomach to tolerate watching your hard-earned capital vaporize and loss, this ain't the business for you. But if you can, then you can hold on and manage the stress that's involved in that, and you believe in what you're trading, this and getting involved and sticking with them can be very rewarding. But again, I emphasize the risk. So This indicator shows me the volume on price. So in this data set, it goes from early October to February, late February. It was January to October. So in this data set, most of the volume takes place at $89. That's been the predominant price, and it's not very far from the 200-day moving average. 200 days is about a year, by the way, in trading terms. There's 250 trading days in a year, more or less. So it's breaking above that, move above that price. It's above the, what we call, this is called the point of control. That means it's above the majority of volume that took place. It's above the price where the majority of volume trading was. And you can see this isn't thin. So there was plenty of trading at these prices as well. So that means that this is a comfort range for price. In other words, if price were trading here, I would say, well, there's not a lot of volume here. There's not a lot of vested interest in this. There's not a lot of people who got in here and said, whoa, I'm in. No, people didn't really get in, so it's likely to fall down. And it did. So here's that high volume spike, but it doesn't really maintain, falls down. Remember, these are daily charts. It falls down and stabilizes within a week or two. Exactly, Osman, guessed correctly. So that's pretty much the long and the short of my presentation in the trade setups I look for. So let me show you how I might identify them from the beginning. This is the MT4 platform, which all our clients receive, for no charge. I break up all of the different assets we sell into different groups, just because I can't look at them all on the same chart, and I don't want to keep thumbing through each and every one of them individually. So here's commodities. Oh, I pressed it, I just got the same thing. And you see his natural gas, palladium, gold and dollars, crude oil, gold and euros, coffee, silver and dollars, copper, wheat, sugar, corn. You get the idea. And so by being able to see these charts fairly legibly, I can get a picture of what's happening in the commodities world. I can get a picture of what's happening in the stock indices, and this is very helpful. And you'll all know what these look like on the daily. They're all down, and they're going to continue to go down for some time. So again, here's a perfect example. Oh, this, by the way, is not a stock index. This is an index of the U.S. dollar strength. That's also going to continue going up for some time. My point is that I think these are all dailies. You can change them. Obviously, you can change them right here, the daily, weekly, monthly, but keeping them all in the same focal length, to use the photographic metaphor, allows you to compare them very easily. So trends in force. Well, the dollar trend, just look at this. This has been a great trade for a while. U.S. dollar index on increasing volume. As the interest rate goes up, the U.S. dollar becomes more desirable as a currency, and therefore the demand for it increases. And I rest my case. Is this complicated? Do you need to be a rocket scientist to do this? Is this a trend you want to attach your little train to? Yes, in my opinion. The stock markets are all going into the toilet week after week, day after day. What's complicated? The FTSE, the Kakaran, the NASDAQ, the Milan, the Nikkei, the mighty Tadawul even. Right, the Tadawul held up beautifully. Even everything, it's all going into the toilet as we speak. Okay, what more do you need to know as far as trends in the stock market? Because they're all the same, and these are macro trends that are happening worldwide. And Gilbert asks, is the force index indicator the same that of Elder? Of course, it's Elder's force index. I see what you mean. Yes, it's Elder's force index, invented by Dr. Alexander Elder, and I highly recommend him and his books. Read them. They're well worth the time. Now let's look at some of the best trades that have been happening lately. These, of course, are FX trades. Dollar yuan. Well, it's a weekly. Let's look at a daily. Look at a 4-hour. Get the idea? Okay, it's giving back a little bit, but when you focus out again, it's coming back. Huge volume. The yuan is weakening. The Chinese currency economy writ large is on the skids. Okay, there's a trade trending. See what I'm referring to, ladies and gentlemen? Why are the moving averages appearing different on the different time frames? Oh, because they are different, Nisha. As the time frame changes, the average of 1 hour is not going to be the same as, in other words, on a 200. Remember, this is a 200-hour moving average. 200 hours is what? 10 days, 8 days. So it's different. It's different. They've got different relationships, but they're all they change accordingly. That was the point they made about technical indicators. The moving average on the daily chart, when you switch the time to an hourly chart, has the same import. It's not the same number, but it has the same value. I hope I answered your question, Aisha. So let's go back to the currency. This is it, ladies and gentlemen. All right. This brings tears to this trader's eye. I know the reason for this, and you should too. And the volume is nice and high, very healthy volume. In fact, if we compress this data, well, I guess it wasn't as high as it was here, but it's been held in pretty steady since 2020, since the pandemic, and it's growing, I might add. This is because, my pleasure, Aisha. This is because the Sultan of Turkey believes that raising interest rates causes inflation. So he's running inflation there. God only knows what it is. And the official rate's over 40%, probably well over 80%, 75, 80%. The currency is devaluing as we speak, and the chart is proof of that. And this guy is destroying the wealth of his people. But, I don't want to get into the politics of it here, but it's important to understand the politics of a strongman autocracy, because when you do, and you see this, and you know why it's happening, well, ladies and gentlemen, is the dollar lira trade a good trade? I'll let you decide. So again, you want to find things that are trending and hook your little wagon to them. Yeah, these guys are doing pretty well, rather, excuse me. The energy firms, let's get to Exxon Mobil was XOM. Here's Exxon, EXM. This has been doing, it's a daily, it's been doing nicely. A little frenetic, but doing nice. These are Bollinger Bands, for those of you who are I don't really use them. It's a remnant of an old chart. I'll just go to this chart dispenses with them. Of ExxonMobil, looking good. You got to find the trending trades. That's what it's about. That's all. The trend is your friend. I'm going to bring the session to a close, ladies and gentlemen. I'll open the floor to some questions, but I hope you get the idea of how this works. I don't want you, if I leave you with anything, it's that I don't want you to feel that this is an overly complicated business. It isn't. Buy low, sell high, buy low. We can make money speculating in either direction as long as there's movement. You don't need fancy, expensive tools. You just need a good set of eyes, a comfortable chair, a pencil, and a paper, and a calculator, and you got to keep your wits about you. And if you can do that, and you can stay focused and not let greed and fear overtake you when you're making money and losing money respectively, you got a more chance to be successful in this business, ladies and gentlemen. So let's open the floor to some questions. Osman says, I did not get what the force index tells you. Okay, easy. Force index simply takes the difference between the opening and the closing, so if it's negative or positive, multiplies it by the volume during that interval, and then prints out below or above a zero line a histographic value. And this little line, I imposed that myself. It's not part of Elder's plan. I imposed just a moving average on it. And so when it's above the line, it generally indicates a positive trend, and below the line, a negative trend. And again, do I need the force index to tell me that the price is going down? Do I need force index? It's just a slight tool. It's like an indicator. Why do they call them indicators? Think of your dashboard on your vehicle, or your airplane, or your vessel. They indicate things that you need to be aware of, but you can't get to where you're going by following the indicators. You'll kill yourself. You use your car and you keep your eye on the tachometer, you'll crash into a tree. No, you have to look down at the tachometer. You have to make sure the oil pressure is normal, and the coolant is not overly heated, and your speed limit is within normal bounds. But you glance down at them. They're indicators. These are indicators. This is the road. This is what you're trying to follow, the trend. So don't be misled into thinking this is going to make you a successful trader. And this is going to make you your ability to see where it's going and to follow it for enough time to take a few dollars out of the market. So I hope I answered your question, Osman. What moving average line is the ideal to buy and sell on? Again, Aisha, I don't think there is such a thing. There's no. I don't even think the question is even relevant. They're indicators. If I see it's broken above the 20, that's good. Broken above the 40, it's just kissing the 50. Well, all right, I'll tell you, Aisha, I guess to answer your question, if it stays above the 50, I'm in. I'm in. That's a serious sign that the price is now more valuable than it has been in the last 200 days. Is that valuable information? To my mind, it is. If someone tells you, I'm selling you this thing, and it's now more valuable than it's been in a year. Well, I think I'm going to buy it because I think I'll be able to sell it for more in a little while. It's my thinking. I could be wrong. But you can tell if a trend is up or down without force index. You're damn straight, Osman. That's exactly what I'm trying to say. Gilbert asks, Seth, if you want to place a trade for a day or less, what scale are you using? 1 hour, 15 minutes, 1 day? And once the trend is determined, are you entering the trade with 1 minute graphs or else? Excellent. Excellent question. And you're right too, Aisha. Excellent question, Gilbert. All right, let's take a look. So I'm looking at the graph of oil. So I want to get myself familiar, I want to take a look at a weekly chart. I see it's been for the last 2 weeks, it's going up. Last week big, this week it's coming down a little bit. So basically a little part of a week. So I see the trend has been down, but it's reversed. So I drill down to say 4 days. Same thing. 1 day, it's smoothed out, but it's pretty much fallen. It even ended excuse me, this is an hourly chart. I meant a 1 day chart. My mistake. 1 day. So in the 1 day, it's definitely up now for a good week and a half. Up. So that's important. I see on the daily chart it's up. So if I can see on the 4-hour chart a similar trend, which I more or less do, the last day has not been so good. On a 1-hour chart, I can tell you it's pretty much Zippo. So Gilbert's question is particularly germane at this point, because if you're trying to determine how long you want to hold this for. You've got the idea. You can see that if I'm trading for an hour, this is choppy waters. If I'm trading for 4 hours, it's still not looking too good to me. If I'm trading for a day, yeah, it's looking good. Although you can see that that last day is a reversal. And if I'm trading for a week, it's still a little bit more choppy. We'll go to the 4-day actually instead of the 1 week. So there's your question, Gilbert. Would I enter this trade now? I would, based on the daily. And furthermore, I would, first of all, I'd also be watching it like hawk, because you can see it's choppy waters. But I would hold this because I believe that OPEC production cut is going to have very significant effect. Not yet, but a lot of people have. I think it's going to have more effect in the near future. So Gilbert, it's a long answer to a very good question. I hope I've shed some light on it for you. Which SMA periods are recommended? Krocklov asks. I use 20, 50, and 200. Pretty common. And I'll tell you something about using the common variables. For example, Elder has their variables in his force index as well. The Elder force, here you can see his length, this length, and that's the 9. He takes a 9 force index level to create the histogram. I like to stick with the common indicator values. That's why 20, 50, 200 I like, because many other traders do too. So the fact that they're looking at the same, I'm looking at the same thing they're looking at is a helpful aid. In other words, they're not, if you're driving, we're all looking at the same roadway. I don't want to be looking at the GPS 3-dimensional satellite view, because that's not where they're driving. They're driving on the road that I'm driving on, and I want to see the same obstacles and things that they're seeing and react similarly to them, because I'm trying to follow them. It's a trend following business. In fact, well, I'll just leave it at that. So Vroclav, did that answer? 20, 50, and 200. That's the short answer. There's I use a different moving average in this volume average, I think, and it's a weird one. And I just dreamed it up myself. With the EMA on volume, I think is here, volume. Yeah, I take a 35 interval moving average on the volume, mostly to smooth it out, because you can see it's more valuable, and so I take a longer one to smooth it out. That's my own consideration. That's just I did that myself. How do you identify reverse points? Osman says. I'll tell you the truth, Osman, I don't. I'm not that good. This is a trend I can see now. It's been in train for 1, 2, 3, 4, 5, 6, 7, 8, 9, 2 weeks. That's good enough trend for me on a daily basis. I do not try to find the turning points. I'm not that good, and I don't believe in it. If you think, you get these people, they'll tell you how much money they make because they got in right here. Theoretically, of course, they never do the trade. They get out right here. That's bullshit. Nobody does. If I can take a little money out here and here, here and here, I'm a happy trader. If I can take money out from here to here, I'm a happy trader. Did I leave money on the trade table? Maybe I did. The point is, I took some money out of the market. That's my objective. So trying to identify the turning points, in my estimation, again, I say this, in my opinion, I could be wrong, is a fool's errand. That's my opinion. Osman. Any other questions, ladies and gentlemen? If that's going to do it for tonight, then I'm going to bring the session to a close, although, feel free. Just one thing I do want to make you aware of, I can ask you a small favor. I want you to answer some poll questions. They're really simple. Here, if you can see them on your control panel. My pleasure, Alexander. Good to see you in the room. Welcome. If you can just answer these questions now, was the host thorough in his presentation? Just click one of the answers, and then I'll click through the next one. There's 5 questions. It'll take you a couple of minutes to do them all. If you can please answer those, I'd appreciate that. Look on your control panel and just run through these. I'd appreciate that very much. Also, at the end, there's a survey that also, it's got 3 questions, take you less than a minute to fill that out. And Jack, go to this one. How would you have preferred the host to, let me see, I'll read that to you. Move that up a little bit. How would you have preferred the host to have changed his presentation? You know, just less time, whatever, just fill in whatever you like there. I'd appreciate that. Well, I'm sorry, I skipped one. Please suggest ways that we can improve our webinar offerings to you so that you'll get more out of them and attend them more often. And here's a series of choices here. What is your preferred day of the week? And what is the optimum length of time? If you could fill those out, we'd really appreciate it. It helps us with the planning. And then, of course, the survey at the end. So how do we view the poll, asks Alexander. On your control panel, you should see something called polls. Polls, yes, you should see this. You see in the polls, you just push the arrow on your control panel and bring it down, and then you can scroll through them and click the answer of your choice. Do you see them, Alexander? On the control panel where it says, you know, you get to, no aha means you know you do, or yes you do. No, you don't. Poll open. Oh. No, that's okay, Alexander. I think I might have made a mistake too. Distributing the poll. Poll is in progress. Collecting responses. My mistake. Thank you. There you go. My mistake. I'm sorry. I'm a better trader than I are a jockey of this. Okay, I should just keep that open for the whole time, actually. Yeah, we're all learning. That's true. That is true. We're all learning. Okay, ladies and gentlemen, then I'm going to, well, I'll let you fill these out. I'll leave the room open for a little bit. I'll turn this on way before the end next time. I don't know why I waited so long. Sorry. So, ladies and gentlemen, let me just make you aware. Our next session will be a week from this Thursday. We're going to talk about one of my favorite topics. Hi, I have a question. MCDA is below the line of yellow color, but increased tendency show green color. The tendency is to lose. Alejandro, I don't understand your question. I don't know what MCDA is either. Moving MACD, maybe? Is that what you mean? Moving average convergence, divergence? I know what that is. That's an indicator. That's okay, Alejandro. Take your time. He will stay around till all your questions are answered. The MACD is a very popular indicator, which I do not use. So I'm not an expert on it. Oh yes. So on Thursday night, the 20th, again, we changed the clocks. I want to note that. Where do we change the clocks? No, we don't change the clocks yet. We changed the clocks. Yeah, the end of October. So it's still 20. It'll always be 2000, but we're going to talk about a reading list and a movie list. Movies and books that are very helpful for all traders, beginners as well as veterans. I read constantly. I'm always reading. I'm always trying to increase my knowledge because this is one of the classic businesses where knowledge is power. And the more you know, the bigger your advantage in the marketplace is. And reading is essential. So I'll talk about books. I'll talk about periodicals. I'll talk about daily newspapers. I'll talk about movies. And it's a fun, easy, to have a beer and a sandwich. You don't need to take notes. You don't have to really, you just have to, it's fun. It's a fun session. All right, ladies and gentlemen. So don't forget the poll and the different and the survey at the end. And I guess that's about it. I think that's enough time for the poll. So I'm going to take my leave, ladies and gentlemen. I'm your host, Seth Julian, on behalf of the staff and the management here, ladies and gentlemen. My pleasure, Gabriel. Thank you for joining us. On behalf of the staff and the management here at Alvexo, we are always humbled and deeply grateful to you for choosing us as your online broker. And for those of you who are joining in us tonight who are looking to open an account with an online broker, please consider opening up an account with Alvexo. This is an example of the kind of work we do for our people. We're stand-up, upright, straight-shooting brokers. We're not right all the time, okay? I'm wrong plenty of times, and I tell you so. And you got to do your own homework. Never trust anybody but yourself. But we do our best. And in the long term, we make more money than we lose, and that is the sine qua non of success in this business. But lose we do, and lose you will too. Nobody in this business makes money without losing, and if they tell you otherwise, they're lying. So you have to be prepared to lose. You have to learn how to lose like any other endeavor. Champions are experts at losing. That's how they become champions. Successful traders are expert at picking good trades because they lost plenty and learn from them. All right, ladies and gentlemen. So that's going to do it for now. On behalf of the staff and the management here at Alvexo, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.